If you're watching this video, it's because you have a mortgage that you've been paying maybe 5-10 years and you know you have another 20 years to go. You want to find out how you can pay it faster without paying more money. I'm here to give you the information that the banks are not going to tell you because they don't want to lose billions of dollars in interest. This shouldn't be a secret, but they're not going to tell you because losing money is not an option for them. However, if you're sick and tired of paying for a mortgage and you want to save time and money, I'm going to give you that information. This is a way for you to pay your mortgage faster and make money in the process. Let me show you. I'm going to show you the situation that you are probably in and how much money the bank is making from your payments. Average mortgage amount in BC is about $600,000. Current rates are 5.19 for a 3-year term. So we're going to change here the term from 60 months to 36 months. 30 years amortization. Here, let's look at your payment. Every month, your mortgage payment is going to be $3,270. Do you know how much interest you're paying? Do you think it's 50%? No, it's more. You are going to pay $2,567 in interest on the first mortgage payment you're making, and only $700 towards the principal. If you don't know what I'm saying, this is what I mean. Interest is what goes to the bank. Principal is what goes toward your home. This is what goes back in your pocket. When you make your mortgage payment, what I mean is most of your mortgage payment goes toward the bank. That's the interest portion. And the principal, which is what goes back to your pocket, is very little. It's less than 25% of the mortgage payment. So how are you going to be done with paying your mortgage if only 25% of your payments is going towards the home? It doesn't make sense. And that's why millions of people, especially in Canada, are stuck with a mortgage for 30 years, if not more. How are you going to make money from your property if you're stuck paying that mortgage? So now you're stuck making your payments till either you sell your home or you die. This might sound sad or depressing, and millions of Canadians are in this situation. Maybe you are in this situation. But if you came across this video, I'm going to show you a way to get out of there. Let's get right into it. I'm going to show you how to get out of this situation. Watch closely because I'm going to show you a step-by-step on how to use your mortgage and get out of this situation. I'm going to go through an example of a family where the wife is making $70,000 a year and the husband is making $80,000 a year. Combined, $150,000. This might not be your exact situation, but you can go and follow through this example. Most people in BC, because of their high mortgage payments, aren't able to save money. So I'm going to leave the investments here empty. And we're not in the pension example here. We're looking at a family that's working. So in case you didn't know, the marginal tax rate on that income is about 40%. What is this? This is the portion that's coming out of your paycheck that's going to CRA. Next, now that's where we're going to put the mortgage information. So let's use here an example where the property is worth $1 million. The mortgage balance we discussed before, it's $600,000, and your mortgage rate is 5.19. Now, again, your situation might be slightly different, but this is just an average example. Most people are currently using a 30 years amortization when they can because it lowers the mortgage payment. So we're going to change the amortization to 30 years. Now, back to where we started, the mortgage payments are about $32.71 a month. Okay, so this is where, like we know, most Canadians are stuck. $600,000, 5.19 for 30 years. Now watch closely. I'm going to show you how to get out of it. This is where it starts. On your mortgage, instead of getting the regular mortgage, you want to get a mortgage that offers a line of credit that's attached to your home. This is called a readvanceable line of credit. So when you're going to go to the bank, usually what they're going to try to show you is what is the lowest rate you can get, 4.99, 5.19, but they're not going to offer you this specific product. You got to get a readvanceable mortgage product. What does that mean is when you pay the principal on your mortgage, a line of credit opens up. Now, step one is to have the right mortgage product. So you need a readvanceable mortgage product. If you don't know if you have it, or if you don't know how to get one, you can contact your bank or a mortgage broker like myself. What is a readvanceable mortgage product? It's a product that when you pay a mortgage payment, a line of credit opens up. Every time you make a mortgage payment, the principal that you've paid open up on the line of credit. That line of credit is attached to your home. This is why it's a readvanceable mortgage product. The 25% that we talked about before on the amortization, the part that you pay towards your home, every time you make a payment there, the line of credits open up. So the $703 that we talk about is now available on your line of credit. If you're still unsure about your mortgage product, if it's set with a line of credit, just contact me so I can look through your documents and make sure that it's set with a line of credit. Now, step two is we're going to want to use that line of credit that's now available after you made a payment and take that money out of the line of credit and invest it. Now we're going to assume that with the investment that you choose, with the help of a financial advisor, that you're making 8% return on it. If you know already where to invest your money and get that kind of return, great. If you don't and you want a referral to someone that can help you choose the product, please contact me. And so you're probably wondering what I'm talking about. We already talked about the fact that you're in BC and you're not able to save money. But I'm using the money that you already are paying towards your mortgage. So remember we said that you were paying $703 towards your principal? Well, that became available on your line of credit. I'm not asking you to take more money out of your pocket. I'm just asking you to use the principal that you paid that became available on the HELOC, take that money and invest it. Now, we're paying your mortgage every month like you should be doing, but we are also saving money. This is key because you weren't able to save that $700 a month. To put it simply, we remember that you're paying a mortgage of $600,000 and the first payment that you made, $700 and $3 went to your line of credit. Simply put, the mortgage payment that you made, where a part of it went to the principal, is now used and invested. Is now used to save money. If you want to reduce the risk, you could save less money. So simply put, the mortgage payment that you're paying and the principal that goes towards your home, the ones that belong to you, we're going to use it and invest it so you now have savings for yourself. Simply put, the mortgage payments that you're making, the portion that goes to the principal, that's the portion that belongs to you. And we're going to use part of it and start investing it. So what we're doing is we're using $1 that's already serving to your mortgage, and we're using that same dollar to make more money with it. The rich, this is what they're doing. They're using the same dollar in 3 different ways. You're paying your mortgage, we're leveraging it, and we're investing it. So you're making money while you're sleeping. So let me show you how this works in the calculator. So this is where you are right now, not investing. This is where I want to take you. Step 1, take 50% of the principal available each month and invest it. So we're taking you from a 0 taxation improvement to $260,000 in improvement from a taxation perspective. So what does that mean? It means that without taking more money of your pocket, you have now saved $40,000 just because you're paying your mortgage. So now I want to take you a step further. I want you to pay your mortgage faster. So we've built $40,000 of net worth, but we can take it further down and pay your mortgage faster. So now you're paying your mortgage using 50% of the principal that's now available to you on your line of credit because you have the right mortgage product. You're using that and you're starting investing. Because you're using that line of credit, you have now a tax improvement. The tax improvement, all I'm asking you to do is to use it. This is money that you didn't have, that now you have, and you put it as a lump sum on your mortgage. This is where the magic happens. You will be saving 3.5 years on your mortgage amortization without taking more money out of your pocket. Now, what does it look like on a real life scenario? I have this client of mine that was offered by her bank a mortgage of 4.99, which was 20 beeps better than my rate. However, by implementing this strategy, she actually saved $86,000 in interest. Why is that? Because of the year of improvement she got on her mortgage. Instead of paying a mortgage for 30 years, she only had to pay it for 26 years and a half. Now, I want to show you right here and there that 3 years at 4.99 is almost $87,000. This is what she saved by doing this strategy because she didn't have to pay her mortgage for an additional 3.5 years. To summarize, the money I'm making you by doing this strategy, we're going to put back into the mortgage to pay it faster without you having to work harder, work more, or spend more money out of your pocket. Pay off your mortgage faster without you having to spend one single dollar more out of your pocket. Now, I've already made you save over $300,000 in tax to CRA. Also built you a net worth of over $200,000 and save you almost 4 years on your mortgage amortization. Now you're wondering, can we do more? And the answer is yes. Here's step 3. Because we saved you all that money and you have more money now in your pocket, we're going to increase your mortgage payment by $100. Let's see where it's taking you. By increasing your mortgage payment by $100 every month, that's it, you will be now saving more than 5 years on your mortgage. And your net worth is now over $300,000. You want to save more? Let's check. Now that you know how to use your mortgage to invest money, I want to show you that if you invest more, you get more out of it. Most people, they're not doing the strategy, they're not building savings. It's like it's almost like having a rent. Let's use your home to build net worth. If you're already saving money into something else, instead of directly putting it in that investment, what I'm recommending is that you put it towards your mortgage to leverage it, because that's where you get the most savings. Because not only you're putting $100 in your investment, but you will actually pay your mortgage faster and save more tax. Let me show you. If we add just $100 a month towards your mortgage payment, you would be saving now 5.5 years of amortization. Your net worth is now over $300. And we can take this even further down. Let's save $200 a month. Now you almost cut your amortization by 7 years. So instead of just saving money directly into an investment, pay your mortgage faster, leverage it, have a tax improvement, and have more net worth. Now let's do an extreme example and put $500 a month. You have cut your mortgage by 10 years. You have a net worth of $700,000. If you're not doing this strategy, you're missing out on huge savings. You have a taxation improvement of over $500,000. Now you're wondering, why would you want to do this on top of having more savings? Why would you want to be doing this strategy? Well, on top of building a net worth, you're paying your mortgage faster. So you're not stuck with the feeling of paying your mortgage for the next 30 years, even 35 years for some people. Well, what about you buy an investment property where you're getting $4-5 in rental income every month? And what do you do with that income? You just pay your mortgage even faster. Now that you know that you can save over $500,000 in taxation, that you can pay off your mortgage 10 years faster, and that you have built $700,000 in net worth, maybe nobody told you this, but yes, living in BC, you can actually buy a rental property now and get an additional $4,000 to $5,000 in rental income for you. You probably thought it was impossible, but when you implement strategies, the strategies that the wealth are using, you can build your own wealth. Now that you know how to save over $500,000 in tax, that you know how to pay your mortgage more than 10 years faster, and that you have built a net worth of $700,000 or more, you can now be one of those homeowners in BC that also own rental properties, generating $4,000 to $5,000 in rental income monthly. If you want to be one of the person that's going to save hundreds of thousands of dollars in tax, build a net worth of hundreds of thousands, and pay your mortgage faster, and buy rental properties in BC, contact me. Remember, step 1 is to find out if you have the right mortgage product. I can help you. Just contact me with my phone number below.